While filling up at the pump, I wondered, if the U.S. has its own oil, then why are gas prices going up? I'm your Fond du Lac neighborhood reporter Jack Porter filling up at the pump, and I asked a UW Oshkosh professor why that's the case. At Quick Trip in Fond du Lac and around the country, prices at the pump are up, and people are feeling it in their wallet.
I just put $35 in there. Normally what would be $25, it's now $35. Prices are just ridiculous.
According to AAA in Fond du Lac, the average cost of gas a month ago was around $2.40. That average price a week ago was $3.36. Today, at the pump, prices are around $3.70 per gallon. At UW Oshkosh, I asked economics professor David Fuller if the U.S. could sustain itself off its own oil. And he says there would be challenges.
So the global oil market is obviously very large, and the U.S. is a big country, but can't control the price of oil on its own. It's not big enough to have a major influence on the world price of oil.
Fuller says while the U.S. could theoretically rely on its own supply, the ramifications would be widespread.
We went full self-sufficiency and we stopped trading oil with other countries. The price of oil would be higher than what it is now.
He says it is much cheaper and easier to extract oil in other parts of the world, which is why the U.S. is not as robust in its oil production.
So we might be able to make the quantities sufficient for what we might need, but it would be at typically a much higher price, and that's going to cause the price of gasoline to be higher and the price of other goods and services to be higher. So
Fuller also says that there's really nothing holding back the U.S. oil companies from producing more in the United States. It's simply just a numbers game. From Fond du Lac, Jack Porter, NBC 26.